Hey, what up guys? Welcome back to the channel. I got a great video here for you today. We're gonna do my investing process explained. I've been getting a lot of questions from different people about how I know what companies to invest into, what stocks to pick. So I'm here to explain everything today. So let's get this started. All right, so you're gonna wanna invest in the companies that you understand the business. And easiest way to figure out a company, if you understand the businesses, is it a company that you already support and that you already buy product from or services or whatnot. So we're going to use Apple as an example. We're going to break this company down, break the stock down, and then this will show you how I go into investing into a company. So if you open up your brokerage account and you go into the search bar, or if you use any other stock tracker app or anything, you could just search AAPL and Apple will come up. Right now, I'm currently using CNBC. This is actually one of my favorites as far as looking up stocks. So today, Apple is up a little over 1%, which is a little over $3, which is pretty good. We're gonna go and look into how they've been doing over the course of this year. So scroll down. So right here, we have the returns for the last 5 days all the way up to a year ago. So if you would have invested into this company 5 days ago, you'll be up 1.5%. Big thing is to look at the year to date. Right now, they're up 74% for the year, which is fantastic. That is absolutely fantastic. So if you invest into this company January 1st, 2019, you're doing really well. You got stock appreciation of 74%. Plus you collect the dividends on the way, and you also have the potential for the stock to continue to grow as the company grow. So you're doing really well. If you would have picked this stock, this would have been a great investment for you January 1st, 2019. So the next thing we want to know is, how do Apple make its money? And Apple being the largest company in the US and the largest cell phone maker in the world, obviously we know that they're selling cell phones, but it's more than just them selling cell phones. That's their big business. But you got your cell phones, your iPads, your computers. You also got your wearables with the AirPods and Apple Watches. You also have the service business with the iTunes, Apple Music, Apple TV, their cloud business, etc. You know, they got a lot of different revenue streams coming in. They make a lot of money. They generate a lot of business. Apple also came out with their Apple credit card, collecting fees off the transactions made by the consumers. So these services that Apple provide generate a lot of revenue. So with the Apple Music, the iCloud, the iTunes, the Apple TV, it's all subscription-based services, and people are paying monthly fees to have those services on their cell phones. And then you also go into the financial side of it, where they're collecting all kind of little fees, little ankle biters, and it's just generating straight profit for them. All right, so now I just switched apps. I went to the Yahoo Finance app. I like to use this app to go through and look at their financials and see exactly how the company is and how they stand and what's their financial status. I also like to see if they're growing as a company, see if they're generating more revenue month over month or year over year, quarter over quarter. And I like to take a look and see how they are performing over the last few quarters. All right, so right here, we're gonna look at some of the key statistics for the company. Right now, they got a market cap of $1.24 trillion. Wow. Over $1 trillion is this company valued at. That's amazing. Apple also pays a dividend, which is a little over 1% of their share price, which is really good. They got a payout ratio of a little over 25%. So 25% of their net profit coming is being paid out into dividends, and the other 75% is being used to reinvest into the company or to pay down debt. Okay, so the next thing we want to look at, we want to see if the company is growing, if they're increasing revenues year over year, quarter over quarter. We want to see what their financial standpoint is like. Are they drowning in debt? Are they cash heavy? Do they got a lot of cash on their balance sheet? So we want to look at the income statement, the balance sheet, and the cash flow statement and break everything down. All right, so we're going to start this off with the income statement, and the income statement shows how much money, how much revenue is being generated. In this case, we got it broken down year over year. So 2016, they generated $215 billion. 2017, $229 billion. 2018, $265 billion. And 2019, $260 billion. So you can see they was climbing in revenue from 2016 to 2018. 2019, they took a little bit of a hit because of all the trade worries that's going on and possible economy crashes internationally. iPhone sales has dropped. So in turn, with iPhone sales dropping, it made the total revenue drop as well. Now here it is, we got their net income. Once again, you could see from 2016 to 2018, their net income was going up year over year, and they took a little bit of a hit for 2019. And like I said, it's because of the international side of the business where they're not generating as much revenue overseas because of what's going on in their economies. All right, so the next thing we're going to look at is the balance sheet. And when it comes to the balance sheet, you're thinking about assets versus liabilities. We want to see if they got a lot of cash on hand. We want to see if they're investing. And we also want to see if they got a lot of outstanding debt, which can cause the company to go bankrupt because they can't afford to pay their bills. So if you look at their cash balance, especially for 2019, they got $48 billion in cash sitting on their balance sheet. That is a ton of money. And if you look at their short-term investments, they also been investing a lot, and they got $51 billion out in short-term investments. And those investments will generate them more income. So they spend that money, whether if it's investing back into their company or acquiring other companies or whatnot, they use that money, they invest it, and it brings them a return. So once you add up the cash in the short-term investments, they got over $100 billion sitting there on their balance sheet. So looking at the balance sheet right here, they got almost $92 billion in long-term debt. Now, me personally, I like the fact that they got more cash in short-term investments compared to the amount of debt that they got. Even though $92 billion is a lot of money to have out in debt, if they have to sell off everything, they'll still have more money left over after they pay their debts off, so they won't go bankrupt. So the easiest way I can explain free cash flow is look at it like rental real estate. So you got your rental, you got your mortgage, you got your insurance, and all the other bills that's associated with that. You collect your rent. Once you pay off your mortgage and your insurance and taxes and all that, whatever's left over is your free cash flow. So Apple consistently have $50+ billion a year in free cash flow. They're not going bankrupt no time soon because they have such a strong company and a really good balance sheet where they got more cash and investments than they do debt, and they have more free cash flow at the end of the month, at the end of the year, so they don't have to worry about not being able to pay their bills. And if we have an economic downturn, they still have $50-something billion on their balance sheet to carry them through until the economy starts to turn back around. All right, so we looked into how the company makes its money. We looked into the company's financials. The next thing I want to look into is the company being innovative? Are they creating new products? Are they keeping up with the times? Are they setting a trend, not following a trend? So let's just use Nokia, Motorola, BlackBerry as examples. So Nokia, Motorola, BlackBerry in the late 90s, mid 90s, late 90s, early 2000s, those were the biggest cell phone company makers out there. Apple really wasn't even doing cell phones. They were only focusing on their Apple computers. And then Apple, Steve Jobs, they decided like, hey, not only do we think we can make a cell phone, we think we can make a better cell phone than the rest of these people. Like we can put out a better product for us and for our consumers. So here comes the smartphone, all touchscreen glass phone, get rid of the buttons. Nokia, BlackBerry, and Motorola, they didn't take Apple serious as far as creating a smartphone. Now you look at them today, where's Nokia at? Where's BlackBerry? Where is Motorola? You don't see these phones around anymore because they let Apple come in and take their lunch money. Apple came in with a really innovative product and it took off like a rocket ship, and they ain't looked back ever since. And those other companies was slow at reacting to try to keep up with Apple or try to compete with Apple, and they let Apple take their lunch money. So another question I want to ask myself as far as the company that I want to invest money into is, do they have a moat around their business? As in, is there a threat to anybody coming in taking their lunch money? So if there's no threat, then the company is pretty much safe. So you can look at this company and say, okay, I know how this company make money. They got a great balance sheet. They got really good free cash flow. They're always increasing their revenue. They always generate more business. They come out with new ideas. So does this make Apple a good company to buy into? That's for you to decide. I'm not going to say yes or no. But you can take these steps as far as breaking down a company, and you can do this with every public company that's out there. You can take this whole little breakdown and do this with every public company. And if you can answer these questions and say, yes, they got a great balance sheet, but no, they're not generating more revenue. Like, you can answer these questions and you can say, okay, this is a good company I should put money into because they're being innovative. there's no threat for them to go bankrupt anytime soon. There's no threat for nobody to come in and take their lunch money. And I see potential growth, whether if it's 20, 30, 50, 100, 10,000%, whatever it is. I can see this company growing, which in turn I will see my money grow. So with that being said, thank you for watching. If you found this video helpful, please give me a thumbs up, hit the subscribe button, and share this with somebody. There's a lot of people out there who don't know what to look for as far as investing into a company. And I believe 100% that this can help other people out and help people grow their money, and it can help them invest into companies long term. So down in the description below, I will be posting a link to an investment app called Robinhood. You can sign up to Robinhood. It's a great way to get started. By using my referral link, both of us get a free stock. Thanks again for watching, and I'll talk to you later.